Right, Professor Hugo Nel, I think we can commence.
Thank you, Derek. Good morning, colleagues. This is the second interactive town hall of the process of restructuring the Rhodes University Pension Fund. I'm Hugo Nel, and it's my great pleasure to welcome you at the session. This is, of course, the second session, as we have indicated, and it is part of a series of such interactive engagements with members in order to provide you with the necessary information, explain the process, and also to put you in a position to make the right decision going forward. Today, of course, is a reiteration of the earlier town hall, and we're going to go from there. Now, before we start, just a few guidelines for the webinar. Your cameras and microphones have been disabled, and you can send questions via the question. You can send questions via the question and answer button on the toolbar. These will be addressed at the end of our presentations. Then a recording of the webinar will be made available post the event. And also don't forget to book your one-on-one consultations with an individual financial consultant at Alexander Forbes to address your individual circumstances. Just a few house rules before we move on. All right, the agenda for today, colleagues. First of all, you are most welcome. The first thing we're going to do is to introduce some of the speakers and the facilitators. After that, we're going to talk to the background and the changes as they are and as they happen. That'll be followed by the resources available to help you make your decision. Then, of course, we have some important frequently asked questions as well. And then the summary and your own questions out of the session. All right, we move on, and the first item now is to introduce our facilitators and speakers for the day. Here we have them. Top left on the screen, of course, Dr. Sizwe Mabizela, the Rhodes University Vice-Chancellor, and we're going to hear from Dr. Mabizela in a minute. Then Professor Gavin Keaton and myself, we are both from the Department of Economics at Rhodes University. We are both trustees of the pension fund, and we also serve on the pension fund restructuring team. We are here today to be part of the process as well. Then bottom right, Mr. Derek Munton, he is the regional head and principal consultant at Alexander Forbes Financial Services of the Eastern Cape. We're going to rely on him for many of the technical issues, and he will be talking to us in a minute. All right, colleagues, we're very much ready to go. Over the page, It now gives me great pleasure to introduce Dr. Sizwe Mabizela, the Rhodes University Vice Chancellor, who is going to talk to us on the background to the whole process and, of course, the changes themselves. Welcome, Dr. Mabizela. Over to you.
Thank you very much, Professor Nell. Good morning to you all, colleagues. As we all know, Rhodes University has two retirement schemes. The Rhodes University Pension Fund, which is a defined benefit scheme, and the Rhodes University Provident Fund, which is a defined contribution scheme. In 2018, actuarial analysis of the Rhodes University Pension Fund pointed to a significant risk that the fund placed on the university's balance sheet. Subsequent to that, extensive exercise was undertaken whereby the trustees and the university reviewed the current benefit structure of the fund. Among other things, they considered the latest trends and developments in the retirement benefits industry and the move away from defined benefit to defined contribution arrangements. They considered the need for the university to consolidate all staff retirement arrangements at Rhodes University. And they also considered the university's objective to de-risk its balance sheet and support future financial sustainability of the university. So, after careful consideration, Council took a resolution that it was no longer practical to continue providing retirement benefits within the pension fund, other than those that had already been accrued on this basis. So, as pointed out earlier, the Rhodes Defined Benefit Pension Fund places an ever-increasing open-ended financial obligation on Rhodes University's balance sheet. You might want to know if the university will continue to be a sponsor to cover the financial soundness risk for members who decide to remain in the pension fund. Look, our starting point here is that trustees have the first obligation to look after the fund and use all levers available to them to ensure that the fund remains viable to meet the needs of those who opt to remain in it. Now, the university may not be able to underwrite possible future funding shortfalls of the fund, of course, depending on the prevailing financial context of the university at that time. Second, the pension fund will therefore have to operate on a self-sustaining or self-funding basis. I must indicate that the pension fund has established an expense reserve account in this regard. In the event that the fund finds itself in a deficit in the future, the trustees will be required to exercise the options available to them in terms of the relevant legislation and the rules of the fund prior to making any approach to the university for any possible assistance. I think, colleagues, that is the context where we are and how the decisions have been arrived at and what is or is not possible. Thank you very much, Chair.
Thank you very much, Dr. Mabizela. That was very enlightening and a very good start to our webinar. Colleagues, we move on, and next up on the agenda is Derek Munton, who's going to talk to us about the changes to the fund as from the 1st of April 2022. Over to you, Derek.
Thank you, Chair. So let's look at the changes to your fund from 1 April 2022. From the 1st of April 2022, your future contributions will be paid into the Rhodes University Provident Fund. You then have the choice of either leaving your actuarial reserve value in the pension fund as a paid-up defined pension benefit, or you can voluntarily transfer your actuarial reserve value to the Rhodes University Provident Fund. So how will this be done? From 1 April, you'll join the Rhodes University Provident Fund and your future contributions will be paid into the Provident Fund. You will also be covered for death and disability benefits under the Provident Fund, as your death and disability cover will cease on the pension fund from 1 April 2022. You would have all received a conversion statement as at 1 October 2021. This provides you with an illustrative value and will help you with your decision. Very important that you do engage with an accredited individual financial planner with regard to the decision, as everyone's circumstances are different. Please note that your conversion value will be recalculated on the actual effective conversion date of 1 April 2022. And the recalculated value will take into account your salary, pensionable service, and accumulated member contributions up to 1 April 2022. We'll talk about the support Alexander Forbes can offer you in the next couple of slides. In terms of your choice, you've been provided with an option form. This was provided in the communication pack, which was sent to you last year. Please make your choice of either transferring your actuarial reserve value to the Provident Fund or to retain your benefit in the pension fund. It's very important that this form is completed by all members, and your completed form must be provided to your Human Resources Division by no later than 15 March 2022. If you don't submit your option form, then the default position will be that you will remain a paid-up member of the pension fund, with your ongoing contributions being allocated to the Provident Fund. Right, there are resources to help you to make your decision. There's support from a team of qualified financial advisors, and we encourage every member to meet with an individual financial planner to assist with your decision to either move your actuarial reserve value to the Provident Fund or to retain it as a paid-up benefit within the pension fund. Just looking at the team, Alexander Forbes has made an individual financial planners available to you. The original invitations for one-on-one consultations were distributed via email on October 2021. Please click on the link provided in the electronic invite to book your session. Please also make sure that you have your provisional transfer statement as at 1 October 2021 with you for your one-on-one consultation. We've included the photographs of the individual financial planners that will be available. Many of you will be familiar with Roy Morgan in the top left-hand corner, who is a senior financial advisor and who has a wealth of experience and is the dedicated financial advisor to members of the Rhodes University Pension Fund and Provident Fund. Supporting Roy on his right, or on the right, the next right bubble, is Buntu Bam, and Greg Bradfield, Don Ridden, Brent Kops, bottom left, and Alushka Anderson. The bottom right-hand photograph is that of Rob Rayner. He's the head of our individual financial planning division within Alexander Forbes in the Eastern Cape, and has been responsible for coordinating the individual advice platform. We've been hosting webinars to tell you more about the Rhodes University Provident Fund. A session was held on the 18th of November 2021 and another one on the 17th of January 2022, dealing with investment planning. Please look out for further invitations and please make every effort to attend. Please note that for those who can't attend, the sessions have been recorded and are posted on the official Restructuring website for those who have not been able to attend. Just to recap, the official Rhodes University Pension Fund Restructuring information site is listed. The access link is www.rupensionfund.co.za. Everything that you need to know about the restructuring, as well as the pension fund rules and the event information, has been loaded on the Rhodes University Pension Fund Restructuring information site, as I have alluded to. So just looking at the upcoming events, we have the My Retirement Picture session scheduled for the 16th of March, and then the Understanding Savings Options session scheduled for 13 April, and the Wills and Nomination of Beneficiary Forms event for the 18th of May. So I'll certainly encourage members to attend those sessions. Once again, They will be recorded and posted on the official restructuring site as well. Right, Chair, thank you. That's my story, and I will refer back to you.
Thank you, Derek. Colleagues, we are making progress with the range of topics which we are covering for today. Thanks again, Derek. That was very useful. Colleagues, this process has been underway for some time. A lot of work has been done. Obviously, the retirement industry is a very highly regulated one, and we have come across a variety of questions. Often members have been exploring what lies in the future, what is there to be done. And we would like to share some of these frequently asked questions with you. These may be questions that you have also thought about. And to take us through those, I would like to hand over to Professor Gavin Keaton. Over to you, Gavin.
Thanks, Hugo. Morning, everyone. And as we said at the beginning, there is, of course, time to ask additional questions at the end of the webinar. So the first frequently asked question is whether the rule amendments for the fund have been approved. And the answer is yes, that all the necessary amendments were approved by the FSCA on the 21st of November 2021. And what are the implications of this for active members, so currently contributing members? And well, the first one is that all active members will leave the pension fund at the end of March this year. And from the 1st of April, all new contributions will be made to the Provident Fund. And then there's a choice for active members to make, whether you wish to leave your actuarial reserve at its value at the 1st of April 2022, whether you want to leave it in the pension fund, or whether you want to transfer that to the Rhodes University Provident Fund. And as Professor Mabozela said, there has been, the fund has created an administrative expense reserve account to meet the costs and expenses of running the fund once new contributions cease from effect from 1st of April 2022. Okay, the next question is, if you make the decision that you want to take your actuarial reserve out of the pension fund, can you put it into retirement annuity of your own choice? And the answer is no, that you would have to transfer it to the Rhodes University Provident Fund. So this is in line with the university's practice of all employees from 1st of April having to belong to the Provident Fund. And it's also what most employers do. They have a designated retirement fund into which employees must contribute. So when will the restructuring process be finalized? So 1st of April, as I've said, that's when active members will all switch from the pension fund to the Provident Fund. But now, if you make a decision to withdraw your actuarial reserve, there will then be a fairly long process before the funds actually are transferred from the pension fund to the Provident Fund. And Alexander Forbes' experience is that can sometimes take between 6 to 18 months to finalize. There's a complicated application process in terms of Section 14 of the Pension Fund Act, and that has to be done for each member individually who's chosen to withdraw their funds from the pension fund and transfer them to the Provident Fund. And once that application has been made, we have to wait for the Financial Sector Conduct Authority to give approval for the actual transfer to the Provident Fund. During this period, your pension fund value will remain in the pension fund, and the capital value that is eventually transferred will be adjusted in line with investment growth on the capital until the actual transfer date. Then the last frequently asked question is, by making these changes, is the university not changing my conditions of service? Well, the university got legal opinion on this, and the legal opinion is that conditions of service are not being changed. What the conditions of service provide is retirement funding, and the university will continue to provide that funding. What is changing is the type of retirement funding being provided, in that it will now be going into a provident fund rather than into a defined benefit fund, and that does not count as a change of conditions of service. So that's the last of our frequently asked questions. As I say, you're welcome to ask more, and I see there are a couple now coming through on the chat, so please start asking your questions. But back to you, Hugo.
Thank you, Gavin. For the F&Qs, colleagues, yes, we are making progress. Maybe these F&Qs included some of the things that you were also thinking about yourselves, and we are going to give you the opportunity to raise them in a minute. Before we do that, just how to get in touch. Well, you can call 0860 talk 2AF, or of course email consult@alexanderforbes.com as we have it on the screen. Just to mention before we proceed that a recording of the webinar will be made available and will be accessible on the Rhodes University Pension Fund Restructuring information site, as indicated on the screen now. Myself and Professor Keaton will now be facilitating the question and answer session raised in the chat facility. If time runs out, the question and answers will be made accessible on the Rhodes University Pension Fund Restructuring information site. So on that note, we're going to proceed with your questions now.
Okay, the first question comes from Billy Morgan, and he asks that the Section 14 process of applying to transfer the funds, is it possible that approval might not be granted? I have an interesting question, Billy. I think that it's a long regulatory thing because government's trying to make sure you don't get what was non-taxable income, and you try and get hold of the cash. But I think Derek is a better place to answer it than Hugo and myself. Derek, are there any times when the Section 14 is not approved?
If proper process hasn't been followed, then there would be the possibility. And the Rhodes University Pension Fund trustees, the task team, project team, and the university as the employer have followed all these steps as required in Section 14 and the various pension fund guidance notes. So in terms of the communication, the counselling, the rule changes have been followed to the book. So it's highly unlikely, extremely unlikely that the FSCA would reject the transfer. And of course, the consolidation of retirement funds, such as taking place at Rhodes University, is in line with National Treasury's desire and objective to have fewer retirement funds registered with the FSCA. So short answer, highly unlikely.
Thanks, Derek. Then there's a question from Tom. It says, will any costs accrue to members in the process of change? Well, there has been this reserve set up within the fund that it will absorb the costs, and I'm pretty sure there's nothing that goes to anybody individually. Derek, could you just confirm that?
Yeah, so there's absolutely no costs. This is one of the advantages of the transfer, is that there's no cost debited against members' transfer values. It's a charge-free transfer across to the Provident Fund. And it's one of the reasons why, as part of the research work that was done, besides the complexities, was the high costs associated with allowing any transfers to retirement annuities, despite the other restrictions.
Okay, then Caroline is in exactly the same boat as me. Caroline, I'm also within 22 months of retirement, so this is a question close to my own heart. You say it seems it might not be worthwhile to move the pension reserve to the Provident Fund. Your comment. Well, I think our comment there, Caroline, is you must speak to a financial advisor and see what they say. Do you agree, Derek?
Yeah, I mean, everybody's circumstances are unique, and it depends on a number of factors. You know, whether you intend immigrating, whether you your current state of health. There's a whole host of factors that will determine whether you leave your pension as a paid-up benefit or you transfer to the Provident Fund. Some folk like the idea of taking ownership of their underlying capital and then utilizing the investment opportunities within the Provident Fund, because there's a whole range of underlying portfolios that members can select. And the setup and structuring of those portfolios and the investment strategy that individuals follow can be tailored to their own specific circumstances. So it is really an individual decision at the end of the day.
And Caroline, you do get a second chance, so that when you actually retire, you again have the choice. Do you wish to remain in the pension fund, or do you wish to then transfer your benefit into a recognized retirement instrument? Okay, there's George Wells says your recent example projections showed that retirement income could be in the range of 50 to 90% of the formally guaranteed pension. Is the university planning to assist long-term staff members who are too close to retirement to recover from such a disastrous outcome themselves? So, George, that was if you chose to withdraw your actuarial reserve and you chose to buy a pension in the market. And then those different projections depended on what kind of pension you tried to buy. Did you try to match the current pension fund, which targets 60% of CPI as increases? Or did you try and guarantee yourself a increase each year, and going even as high as trying to guarantee 100% of CPI? But you do have the choice of just remaining in the pension fund under current conditions. So nobody is required to withdraw their actuarial reserve and to buy a pension in the marketplace. You can remain as is, and you can retire as you would have previously. Anything to add, Derek or Hugo?
Gavin, I think you've covered that nicely, and correctly so. It really does depend on the type of pension that you're wanting to secure. And then what the financial advisors also do for active members is that they do some various scenario planning based on various return outcomes, what the expected outcome could be. And that, as I said, is really an individualized calculation that one needs to consider. And of course, where you do see some mismatching or shortfalls, the Provident Fund does have the facility for members to make additional voluntary contributions at no extra cost. So we do encourage members to take advantage of the group arrangement and the fact that it is a very cost-efficient savings mechanism for members to make additional voluntary contributions at no extra cost. And we've got various financial planning tools and projection tools online. When members have registered and got their PIN and password, they can then access these tools, and the projection tool automatically downloads the member's fund value and then makes various projections based on current contribution levels and the current fund credit that is currently invested in the Provident Fund. And with this financial planning tool, you can add the additional voluntary contributions, and it will give you what we call a replacement ratio, and will give you various retirement outcomes based on your current contribution levels or your contributions plus your additional voluntary contributions. Thank you, Gavin.
Thanks, Derek. Then there's one from Bruce. I'm not sure if I'm understanding the question correctly, Bruce. So if I'm not, please come back to me. But I'm going to ask Hugo to answer this. You say I didn't mention the possible range if one moves to the Provident Fund. Is it possible to get some clarity on that? So I'm interpreting that as the possible range of investments that you can choose in the Provident Fund, because there isn't just one sort of portfolio. So Hugo, could you give some indication of what kind of choices one has once one moves to or if one moves to the Provident Fund?
Yes, thank you, Gavin. Thank you, Bruce, for the question. The Provident Fund, of course, being a defined contribution fund, incorporates so-called member choice. That means that one's funding within the Provident Fund can be invested within a range of portfolios chosen by the member, by yourself. So there is a range of portfolios, and they range from let's say a more risky type of portfolio, incorporating a large proportion of shares or equities. These are typically utilized by members who are starting off a career with a long investment horizon. And then the fund also has a so-called life stage process by which members would automatically and gradually, as you get older and closer to retirement, move into another portfolio where the volatility or the risk is then slightly less. But members can, of course, exercise these choices themselves. So the short answer is that upon joining the Provident Fund, a member has access to a range of portfolios. These are carefully explained. One can very clearly see how they are structured. And for that purpose, we have a very important benefit within the Provident Fund. Members can, to a large degree, take responsibility for their own management to reach their own goals for retirement.
Thanks, Hugo. The next question is from Basil. It's in a number of parts. The first one is, what annual increase can I expect if I stay as a member of the pension fund? Well, Basil, the pension fund targets 60% of CPI. It's an increase that will be 60% of the previous year's average consumer price inflation. Whether it can give you that increase depends on the investment performance. So as a trustee, each year the actuary tells us what the investment performance was and what increase that can be afforded. And there have been occasions when 2 years ago when we were not able to give an increase at all. But there have been other occasions where we've been able to give more than the 60% of CPI. So it depends on investment performance, and that is, of course, the big unknown. But the target is to try and give members at least 60% of CPI. The second question is, how secure is the income from the pension fund? Well, the pension fund employs two of the top fund managers in South Africa. They invest your funds in a whole range of assets. So it's as safe as, I guess, as any assets can be. A proportion of them are offshore. That's limited by the Pension Fund Act, and the majority of the investments are local. But you have professionals whose job it is to ensure that the value of your capital is not only secure, but that it grows over time. And then the third part is, am I allowed to transfer the pension fund into another approved financial service provider? And say the answer is that you have to move to the Rhodes University Provident Fund. Anything I left out there, Derek?
No, I think you've covered that, Gavin. And then just to reassure pensioners, active members who elect to remain a paid-up defined benefit member, is that the pension fund continues to be run by the Board of Trustees, and you have a very competent board with a wealth of experience, very capable and very educated Board of Trustees managing the fund, so they still remain intact. The fund is still valued every year by the fund's actuary, Gary Velsich. He's one of the top actuaries in the country. And he applies the same actuarial assumptions as normal. So there's safeguards in terms of ensuring that the fund is sustainable going into the future. So that's just further reassurance. And the fund has to obviously still continue to comply in terms of its audited financial statements and its submission of its triennial actuarial valuations to the Financial Sector Conduct Authority. So there's plenty of safeguards in place to reassure members and pensioners that the fund is in very good hands, besides the professional investment managers that you've referred to as well. Thank you, Gavin.
Great, thanks, Derek. Then from Billy, he says, I had experience with my session, this presumably with the consultants, where I was given a single figure I would get out of about 60% as opposed to the 97% I would get from the pension fund. I don't think all the consultants are singing from the same sheet. Derek, can you comment on this? But I just want to say up front, it depends very much on individual circumstances, Billy, you know, depending how old you are, what your health is, your dependence. But Derek, you know much more about this than I do.
Yeah, it's quite correct. It really does depend entirely on individual circumstances. The age gap between the principal active member and his spouse, how far you are to retirement, etc. So it is very individualized, and it is in that range. So the outcomes can be anywhere between. So if it was previously 97%, 60% of 97%, that would be about a 61% pension of what you would have got, and that is in the range. It's about it can be anything from 20 to 40% less, and that's a function of the fact that the Rhodes University Pension Fund's retirement formula, the accrual rate of 2.7%, is virtually unheard of. So the starting pension in the Rhodes University Pension Fund is extremely high. The norm for defined benefit funds is about 2%. So as you did allude to, it really depends on the individual's circumstances at the time. Each one has a different outcome. The actuary that has done various projection scenarios for all the members, and the financial advisors have got this information to assist them in guiding members. And in general, we just have to accept that members are not, they would have been perhaps in a more favorable position had the fund continued as an ongoing pension fund, and the university gave the commitment that come hell or high water, they'll just continue putting money into the fund. But that isn't the situation. The situation is that there's a transfer taking place, and the Provident Fund does give members the opportunity to close that gap by increasing contributions through additional voluntary contributions and following an appropriate investment strategy. Thank you, Gavin.
Thanks, Derek. And then Bruce, you said in my response to George's question, you discussed the option if we tried to buy an RA yourself. I'm interested in the range of possible percentages if one moves to the Provident Fund. I understand this is an approximation, but this will be helpful for me. I don't actually understand the technicalities of that.
Yeah,
Derek?
I think that maybe there's a confusion. It's not a retirement annuity, it's an annuity. So it's when one retires, you've got to purchase an annuity of your choice. So that could be a level annuity, escalating annuity, a with profits annuity, a living annuity, life annuity, joint and survivorship annuity. There's such a wide range of permutations and options available in terms of the structure and type of annuity, let alone the different annuity service providers out there. So it's quite a complex process in terms of analyzing the entire permutation of options available to retirees.
Yeah,
yes, yes, correct, Derek. Thanks, Gavin. I also thought about Bruce's question. And I also wasn't sure exactly on the meaning. Maybe just to separate these issues, upon moving, while someone is still an active member working for Rhodes, when moving into the Provident Fund, then of course there's no buying of a retirement annuity yet at that stage. When moving into the Provident Fund, it means that one's value and contributions in the Provident Fund get invested within the range of portfolios according to member choice as selected by members. And the ultimate value of a member in the fund will then very much depend on the years of service, how long you have contributed, and of course the return on the markets. Upon retirement then of course the whole value within the fund is available to the member to be converted into a retirement annuity. And of course, a certain amount of cash can be withdrawn. The tax-free part that can be withdrawn at the moment is 500,000. And the rest must then by law go into a retirement annuity. From that point onwards, the member would then receive monthly returns as provided by the annuity. And of course, there's a variety here. Living annuity, fixed type of annuities, all those answers can be explained. I'm not sure if that helps, but just something from my side. Thank you.
Thanks. The next question is, where do we get access to the information on the various options? I asked the Alexander Forbes consultant for this, but was never sent to me. Is this on the website? Again, Derek, could you help with that?
Yeah, so we'll be sending written communication out to all the members on the various portfolio options. This will go out in March. And we'll also be setting up another webinar to explain the various underlying portfolios. So that will be forthcoming. And currently there is a member guide on the various underlying investment portfolios for the Provident Fund members. So the projections that the individual financial planners have provided with members who have consulted with them work on various return scenarios, real return scenarios, and those real return scenarios are quite conservative. The balanced portfolio building block within the Provident Fund, if you look at the last 5-year average compound returns, are actually greater than the highest real return projection scenario that was included in the spreadsheet that was provided to the consultant. So one has to be conservative when one does projections. You know, you work on a 2% real return, 3%, and a 5% real return. And as trustees, we're all well aware that there have been periods, protracted periods, where the fund has outperformed a 5% real return. So just to know that there is the possibility that, you know, one could exceed the returns that have been provided for in the projections that the consultants have been sharing with the active members. Thank you, Gavin.
Okay, then Caroline says, if after retiring in December 2023, I receive an amount, for example, through inheritance or sale of property, may I invest it in the Rhodes Pension Fund? And Caroline answers no, there will be no new contributions to the Rhodes Pension Fund as of 31st of March this year. It will be a closed fund. Patrick says, is 15th March the cutoff date for transfer from pension fund to Provident Fund, or the beginning? Can one move now? No. So Patrick, 15th March is the date by which you must say whether you're leaving your funds in the pension fund or whether you wish to transfer them. The actuary then has to work out the actuarial value as at the end of March, and then that whole Section 14 process has to begin, where permission is obtained from the FSCA to transfer the funds. So you can't move earlier. Billy says, thanks. The 2.7 is exactly why I chose the pension fund. Yes, okay, so that's the accrual rate. George says, it seems that if personal circumstances involve many years of service and now close to retirement, the outcomes are far from favorable. With only a few years to go, voluntary additional contributions aren't going to make up the difference. Well, George, you still have the option of just leaving things exactly as they are and staying in the pension fund. That has not changed. You're not being forced to leave the pension fund. You may remain in it. The fund will continue as in the past to target 60% of CPI as an annual increase. The only thing that has changed is what Professor Mabazela warned you, is that the university has said that if investment returns should be very poor, and if the university is not in a financial position to make contributions to the fund, then you must realize that other action will have to be taken to keep the fund on a sound basis, such as, for example, not giving a pension increase. Anything on that from Hugo or Derek?
Gavin, yeah, I think you've summed it up, Gavin, quite well.
Nothing to add from my side, Gavin. I think it was covered.
Okay, so then Billy again says it's back to this part about the university not being able to, the possibility that the university would not be able to inject funds into the pension fund. Says the last part is problematic. If we're all making the decision based on the fact that it is unsustainable for the employer to continue underwriting the pension fund, then there should be no option for the university to suddenly start up again underwriting the fund when it becomes affordable. I feel that it's inappropriate to force the Activ members to make a once-off irrevocable decision, but for the employer to reserve its right to change its mind based on some criteria it can choose to define at any point. Yeah, so I mean, this is a sort of conundrum because we don't know what the university's future financial position will be. It may be that government suddenly starts to give large amounts to the to tertiary education, and the university's finances start to look fantastic. But it may also be that they continue to be problematic. You're not being forced to make a once-off decision, because you do still have the possibility that when you retire, you could choose not to leave your funds in the pension fund at that stage. But it is true, it's an unfortunate position we're in, but nobody knows the answer. The university doesn't know the answer. The trustees don't know the answer. We don't know what the future finances of Rhodes will look like. So then, Harold, I've just answered your question. So you say if the member doesn't transfer, can they opt to at a later date, or is this a one-off opportunity? I think, Derek, the only other date is retirement. So there's not going to be a second shot in a year's time or 2 years' time or whatever. So it depends when you actually retire.
Correct. So rule amendment number 10 is very clear on that Activ members have a once-off opportunity to transfer into the Provident Fund. And if they don't do that, it's just their future contributions being allocated to the Provident Fund with a paid-up defined benefit in the pension fund. And then come retirement date, the retiree will have two benefits: a benefit paid from the Provident Fund and the benefit paid in accordance with that retirement formula with service up to 1st of April 2022. And the retiree will then have the choice of either remaining in the Rhodes University Pension Fund and drawing a pension, or uplifting his reserve value at that time and purchasing an annuity of his choice.
And Nikki, you correctly say you can hand in your form earlier than 15th of March. The sooner the better. Get the admin out the way. If you've made your decision, then send your form in. Okay, that seems to be the end of the questions for now, but it's not your last chance to ask questions. You can ask questions through the website. So if something occurs to you after this, please do so. And over to you, Hugo, to wrap up.
Thank you very much, Gavin. It brings us to the end of the session. Colleagues, thank you for your very useful interaction. I think the questions were all very valid, very appropriate. We hope that we did give you some answers. If not, then remember to please feel free to make individual contact with our colleagues at Alexander Forbes. You can also contact ourselves or the webpage as it is to ensure that you have all the necessary information at your disposal. And as indicated by Derek, this will not be the last opportunity. It's all part of a process, a series of interactive events. There are newsletters, there are various postings on the website, and from time to time we have these town hall webinars. So from my side, yes, I think that covers it for me. And it's my great pleasure then just to say thank you to everyone involved, Derek, Gavin, and of course, Dr. Mabizela for starting us all off. Yes, thank you very much. I think that concludes from my side. Are you muted, Gavin?
Gavin, you muted? Gavin, you still muted?
Gavin, you muted?
Sorry. There was a last question about where do you get the form? You ought to have got the form. It should have been emailed to you, but you can ask Alexander Forbes for a new one. And how can you decide if you don't have the portfolio options? You must make an appointment with one of those financial consultants that we spoke about at the beginning, and so they can help you. Okay, says I did. Derek?
Yeah, so what we'll do is that we will email the form out again, and just to remind members about the importance of completing it. So we'll email it out to all the members again.
Well, colleagues, members of the team, that is then just for us to say goodbye, and there will be more information coming. If anyone would like to add an end note, Gavin or Derek, please do. But that brings us to the end of the session. Goodbye, everyone.
Cheers, everyone.
Yeah,
Thank you very much.
Thank you very much.